actually the story of the top several hundred microfinance institutions over the last few years. So here I'm going to kind of shift our lens really and focus on the 90% that are unbanked, and shift our lens therefore to not the existing customers but those that you all might see soon. So that great story about microfinance actually gets even better when you add on the fact that the sector is now being connected to the largest and cheapest distribution system ever conceived, and that is your mobile operator systems. So over the past 20 years, actually, yeah, microfinance, or retail banking for the poor, as we call it, has evolved into pretty serious business. And the aim is huge, has been huge for the last 10 years. And that is not just making little loans to women that are colorfully dressed and sitting around a baobab tree, but actually building an entire financial system in developing countries that serves the majority of the population of those countries. And mobile banking, actually, for this population, will enable us to cut costs of delivering those services to the point that even reaching the most remote rural clients and with the smallest transaction size becomes commercially viable. So I wanted to talk to you about three things related to this topic. One, what's been going on so far in the field of microfinance, particularly now with the financial crisis that's all around us. Secondly, the opportunity that's presented to the mobile network operators in m-banking for the unbanked. And third, what needs to happen to make that work for both regulators, agents, and customers. First, where we come from in the field of microfinance. First of all, it's key that you be aware that this is no longer the purview of NGOs and charity thinking kind of people. There's very serious commercial rigor has really crept in and taken over the thinking in the field for the last probably 20 years, I'd say. The range of services has grown far beyond the small loans and to now include convenient deposit services and microinsurance and money transfers. The institutions, as I mentioned earlier, that are leading this field are profitable. If you take the top 100 in 2007, they made a return on equity of 14%. Not bad. It's not just NGOs, as I mentioned earlier, but you have commercial and state banks, cooperatives, even Walmart and Electra and other white goods providers are now actively involved in providing financial services to poor people. Walmart's offering a zero fee $5 minimum deposit savings account, for example, in Mexico. And yes, deposits. Deposits are actually incredibly important and becoming more and more so. Deposits represent about 62% of the assets of the top 100 microfinance institutions. And if you take Africa alone, the deposit-taking institutions in Africa cover 90% of their assets with small and medium-sized deposits. Most of the major international banks are getting into the active access to finance for poor people. Deutsche Bank, Citigroup, JP Morgan, Standard Chartered, ABN, and all their brethren are actively getting involved in the field, mainly financing microfinance institutions, but some are doing advisory as well. Socially responsible investment is founded in the last couple of years. We've now got 100 socially responsible investment funds that are dedicated to microfinance and look dedicated to getting a return on their money as well. Yes and no. Now we come to cell phones, which are now being ubiquitous in most of the developing countries where the unbanked live. We're seeing new partnerships popping up everywhere that have actually dramatically, that prove, I should say, to dramatically expand access. And PESA will come to in a minute, but just think about an organization that can come to a country like Kenya and within 2 years have 5 million customers in a country that only has 5 million bank accounts. We'll come to that in a second. So the financial crisis that's been ricocheting around the world has indeed and will indeed shift the course of microfinance for sure, but that positive trajectory we expect to remain on course since the fundamentals are sound and frankly the market is not going away. What's happening though is that as liquidity is contracting in the global markets, those microfinance institutions that came to be reliant not on poor people's deposits, but on cross-border debt and hard currency financing are finding themselves facing refinancing troubles as their sources of funds, commercial banks and others, pull back. And money has become much, much more expensive, much shorter, much more conservative, and harder to raise, even for the best institutions. Of course, as I mentioned, the deposit-taking institutions are faring pretty well. banks are being hurt too. The World Bank estimates that the combined punch of the food crisis and the fuel prices have contributed to pushing another 135 to 155 million people over the brink into extreme poverty. Adding to this woe, remittances, which were already slowing dramatically in the corridors between the US and Latin America, have now begun to slow significantly in the Europe-Africa corridors as well. We hear reports of women who needed those remittances to pay back their loans, saying that they're now getting a third to a half as much money from their relatives in Europe as they used to get, and it's causing trouble. So yes, the microfinance institutions are now seeing their arrears climbing up as poor customers are having a harder and harder time paying loans as their sources have been, funds have been drying up. So yes, the financial crisis will cause impact, but since the underlying fundamentals, as I mentioned, are strong, we expect microfinance not only to weather the storm, but to emerge actually even stronger than before, and a ready partner for all of you. So what does that partnership, or what does that opportunity look like for the mobile operators? I'd like to give you a little sneak preview of that, and by showing you or telling you about the findings of a really exciting market market sizing study we just completed at CGAP with the GSM Association and with McKinsey. That'll give you a hint as to how big this opportunity just may be. So here's our best estimates based on the number of analytics today. There are 1 billion people out there in emerging markets who don't have a bank account but do have a cell phone. 1 million people. Excuse me, 1 billion people. 1 billion people don't have a bank account but do have a cell phone. We estimate that mobile delivery can reduce the cost of delivering those financial services by more than 50%, and some suggestions are in the analytics that this could be as low as 10%. So if we get it right and move on the opportunity in every region of the world, we think that mobile money services could reach 290 million unbanked people in the next 3 years. And even though these customers are mainly very low ARPU customers, mobile money, we think for the unbanked could be a $5 billion business within those 3 years. So the opportunity is clearly there. But how can you make it your market? So over the last 5 or 6 years with CGAP working with the pioneers and pre-pioneers, regulators and others who are working to have mobile banking come to the unbanked, we've made some significant mistakes and learned some real lessons. And the one lesson that I can't believe I have to keep learning over and over again in life, since it's such an obvious one, especially to those of you or those of us that have small children or pets or employees, and that is it's really all about incentives. So let me look briefly at the 3 partners that a mobile network operator is going to need to make this really happen. And those partners I would mention are the regulators, the mobile banking agents in country, and the customers themselves. And what do each of those partners need to be motivated, incentivized, if you will, to join you? Now clearly the banks themselves and the microfinance institution partners will also be another partner, but I think that conversation is for a more intimate setting and a longer chat.